Welcome back to the deep dive. Usually when we grab a quarterly report, we're just checking the health of one specific company.
Right. It's a very focused look.
Exactly. But today, this one feels bigger. This feels like we're taking a pulse check on the entire Indian economy.
Especially heavy industry and infrastructure, yeah. We're breaking down the Q3 results for fiscal year 2026 from Tata Motors Limited.
The juggernaut itself. And just to be clear for everyone, we're talking about the commercial vehicle side of the business here.
That's right. The entity that used to be TML Commercial Vehicles Limited. We're talking trucks, buses, the real heavy iron, the backbone of the whole logistics sector.
And I think the mission for this deep dive is to figure out how a massive legacy industrial player is, well, pulling off two things at once that seem completely contradictory.
I know what you mean.
On one hand, they're growing their traditional business, the nuts and bolts, by huge numbers. And on the other, they are completely rewiring for an electric and digital future.
It's the classic changing the engine while flying the plane scenario.
Exactly, except the plane is a 55-ton truck.
Right. And our source for all this is the investor presentation they submitted to the BSE and NSE stock exchanges. That was on January 29, 2026, and it covers the quarter that ended December 31st, 2025.
Okay, so let's not bury the lead here. The headline number is, frankly, startling. Total wholesales for the quarter, 117,000 units.
Which is a 20% jump year over year.
20%. In a mature industry like this, that's huge.
It's massive. But, if you're a serious investor listening to this, or really just anyone who wants to understand how a business works, you know that old saying?
Volume is vanity, profit is sanity.
And cash is reality. The wow factor here isn't just selling more trucks, it's the quality of the business. We're looking at double-digit EBIT margins, 10.6% to be precise.
Yes, that's what I was.
And they generated a staggering 4,752 crores in free cash flow.
In just 90 days.
In one quarter.
That cash number is what made me sit up straight. I mean, nearly 4,800 crores. That just screams a level of operational discipline we haven't seen for a while in the sector. So, okay, let's strip this engine down. Segment one, the financials.
Let's do it.
Revenue is up 17% to 21,500 crores.
Which, tracks pretty closely with the volume growth, but this is where you have to look under the hood. The question is, why are they making more money?
Right. It's not just about moving more metal.
Not at all. It's a concept called realization, basically pricing power. They aren't just slashing prices to get trucks out the door.
So if we look at the margins, EBITDA, for example.
EBITDA margins hit 12.7%. That's up 30 basis points. But the real story, the one the market really cares about, is EBIT.
Earnings before interest and taxes.
Correct. And they crossed that double-digit threshold, 10.6%. That is a major psychological barrier for a heavy manufacturing company. And it's a full 100 basis point increase from last year.
That suggests some serious operating leverage. For every new rupee of sales, more is dropping to the bottom line instead of being eaten by overhead.
Precisely. And I saw you looking at the PBT, the profit before tax.
Yeah, the PBT before exceptional items, it's sitting at 2.3 thousand crores, up from 1.7 thousand crores. That's a massive delta.
It is, and it validates their entire strategy. They've shifted from a push model stuffing dealerships with inventory to a pull model where actual demand dictates what they build. It protects those margins.
I want to go back to the cash flow, though.
Please, it's the most important part.
The 4,752 crores. How does that connect to the balance sheet?
So in manufacturing, cash gets trapped in what's called working capital. Think of it as unsold trucks sitting in a yard, or bills that customers haven't paid yet. Tata has tightened the screws on this. They've become so efficient that they've unlocked billions in cash.
And the result of that is, well, it's dramatic. As of December 25, they're sitting on a net cash position of 3.9 thousand crores.
Right. And to give you some context on why that matters, in March of 2025, just 9 months before, they were in a net debt position.
Wow.
To swing from owing money to having a nearly 4,000 crore war chest in under a year, that's what a fortress balance sheet looks like. It gives them so much freedom to invest without worrying about interest rates.
Which is absolutely crucial when you're trying to fund a transition to EVs.
Right.
Okay, so the financials are solid, the accountants are happy, but you don't sell 117,000 trucks just because your working capital is good. Someone has to be buying them.
That's right.
So, segment two. What's actually driving this surge in the market?
It's really a convergence of three specific triggers, a perfect storm of positive factors. First, the report points to something they call GST 2.0.
Okay, we've been hearing about the goods and services tax for years. What makes this 2.0? Why is it moving the needle now?
It's about the efficiency gains finally really maturing. The GST got rid of all those state border checkpoints. Trucks aren't waiting for hours and hours anymore.
So faster turnaround times for logistics companies.
Exactly. More trips per month means more profit. And what do profitable fleet operators do?
They upgrade their trucks.
They buy new trucks. The second trigger is just the calendar. The October to December quarter always captures that festive momentum, Diwali, Christmas, wedding season.
Everything needs to move.
Right. And the third trigger they mention is post-monsoon infrastructure.
Which makes sense. You can't really build roads or dig mines in a deluge. So once the rains stop, all that pent-up demand gets unleashed.
That's the one. And there was one other little detail in there about freight rates inching up.
I saw that. I feel like that's a detail that's easy to skim over, but it's vital, isn't it?
It's the single most important leading indicator. If freight rates are low, transporters are barely breaking even. They're not buying a new truck, no matter how good it is. The fact that rates went up means Tata's customers are making healthy money.
A healthy ecosystem, not just a healthy company.
That's it.
Okay, so the macro picture is strong. Now let's look at what they're actually selling. Segment 3. The big rigs-heavy commercial vehicles, or HCVs, grew 23%.
And that's your proxy for industrial health. When HCVs are growing, it means factories are shipping, mines are digging. And the report specifically notes that Tata is leading the market share recovery there. They're winning back that heavy-duty ground.
But, and I think this is the most surprising number in the entire presentation, the heavy trucks weren't the biggest growth story.
Not even close.
I looked at the passenger carriers line, the buses, and I had to do a double take. 71% growth, year over year. 7-1.
It's a staggering number. I mean, for a mature category like buses, you usually see, 5, maybe 8% growth? 71% is explosive.
So what on earth is driving that? Is everyone just suddenly deciding to take the bus?
In a way, yes, but it's policy-driven. This isn't just private operators buying a few coaches here and there. This is the government.
Ah, so state tenders.
Massive state tenders for public transport modernization. Tata has an existing order book of about 6,000 units, but they're also getting ready to bid for another big CESL tender.
CESL being Convergence Energy Services Limited.
Correct. And that tender is for another 6,300 units, most of them electric. So the 71% growth isn't a fluke. It's a structural shift in how India moves its people.
That's fascinating. Usually, you think of government contracts as low margin, but at this kind of volume, it must provide a huge, stable base for the factory.
That's exactly it. It buffers them against the ups and downs of the private truck market.
And what about the smaller guys? The little delivery trucks bringing our packages?
Solid growth. The small commercial vehicles, SCVs, grew 16%. A lot of that was helped by new launches like the Ace Pro and Ace LNT. The Tata Ace has been the king of that category for decades, and this is them defending their castle.
Right. Okay, so the present day, the diesel and CNG business is booming. But the real valuation of this company, and probably the interest of a lot of you listening, is tied to the future.
The tech transformation.
Exactly. Segment 4. They've launched this new brand, TataTrucks.ev.
And this is where that big R&D budget shows up. What's important is that they're not just, retrofitting batteries into old diesel chassis. They're using what they call the IMO EV architecture.
IMO EV. Break that down for us.
Intelligent Modular Electric Vehicle Architecture. Modular is the key word. It means they can use the same basic battery and powertrain setup for different truck sizes. It drives down cost and speeds everything up.
And they're already shipping real hardware. The Prima E55S, a big prime mover. And then there's the Prima 3540K, which they're calling their most powerful tipper.
And that tipper is a really big deal. See, an electric delivery van is, relatively speaking, easy. Predictable routes, light loads. But a tipper truck? That works in a mine. It works in mud on steep inclines. It needs incredible torque.
So by electrifying a tipper, they're sending a message.
They're signaling to the entire industry. Our EV tech is tough enough for the absolute worst conditions you can throw at it.
They also launched a new brand, Azura. What's that about?
That seems to be a play for the premium end of the light and intermediate market. Excellence reimagined, I think, is the tagline. Better cabins, better features. You have to remember, as the driver shortage becomes a real problem, fleet owners have to buy nicer trucks to attract and retain drivers. Azura is aimed squarely at that.
Got it. And I also saw they're not putting all their eggs in the battery basket. There's a partnership on LNG with Think Gas.
A very smart hedge. Batteries are heavy. For long-haul trucking, the weight of the battery eats into your payload. Liquefied natural gas, LNG, is a great bridge technology. It's cleaner than diesel, but gives you the range that batteries can't match yet.
But you need the fueling stations.
And that's what the Think Gas partnership is for. They're building the ecosystem so the trucks actually become a viable choice.
One last tech point that I think is underrated: safety. They mentioned meeting European standards, ECR R29003.
This is huge. Historically, Indian trucks have not had the best reputation for safety. By adopting this really tough European crashworthiness standard, Tata is raising the bar for everyone. It protects drivers, but it's also a smart strategic move. It forces cheaper competitors to spend money to catch up.
Okay, let's move to segment 5. We've talked hardware, but the modern auto business isn't just about selling steel. It's about services.
The non-cyclical business, the holy grail. Truck sales go up and down, but service revenue is steady.
And the star here seems to be Fleet Edge, their connected vehicle platform. We've seen telematics before, but a metric on renewals jumped out at me.
Oh yeah, Fleet Edge subscription absolute renewals improved by 80% over Q1.
80%. That suggests it's incredibly sticky.
It suggests that once a fleet owner starts using the data to run their business, they can't imagine going back to operating blind. It turns a one-time truck buyer into a recurring revenue subscriber. It's the saucification of trucking.
Then there's the smart city mobility side. We touched on the bus sales, but the operational stats are impressive.
Over 3,600 e-buses are running right now. They've covered 47 crore kilometers. But here's the number that really matters: 95% uptime.
That basically kills the old reliability anxiety argument against electric public transit.
Completely. If you can run a city bus fleet at 95% uptime, the tech is mature. It's not an experiment anymore.
And what about outside India? International business.
Exports are roaring back. Shipments were up 70% year over year. They're focused on the SAARC region, the Middle East, North Africa, and Sub-Saharan Africa.
And they're tailoring the product, right? Not just dumping the Indian models.
Exactly. They showcased a Euro 6 range specifically for the Middle East. That shows their engineering to global standards, which opens up a lot of new markets.
So let's bring this all home. We've looked at the cash, the market triggers, the bus explosion, the tech stack, the digital services. If you had to summarize this whole deep dive, what's the headline?
The headline is firing on all cylinders. I mean, you have record volume at 20% growth. You have margins crossing into double digits. You have a cash pile of nearly 5,000 crores generated in 90 days. And most importantly, they're using the profits from the old school diesel business to fund a world-class pivot to EV and digital.
And for the listener, what's the big picture takeaway here? How should they file this away?
I'd file this under successful transition. We hear so much about legacy auto struggling to adapt. This is a report card that shows a company morphing from a hardware maker into a true mobility solutions provider. They're balancing the cyclical truck sales with that steady, sticky revenue from services and government contracts. They are future-proofing a giant in real time.
It's not just about torque and horsepower anymore.
It's about data and recurring revenue.
Okay, I'm going to leave you with one final provocative thought. We spent a lot of time on that 71% growth in the bus segment. Now, everyone loves talking about personal EVs, Tesla or Tata's own electric cars. But with the government pumping this much money into mass tenders and bus infrastructure growing at such an explosive rate, are we looking in the wrong place for the real EV revolution?
That is the multi-billion-dollar question, isn't it?
Are we witnessing the start of a shift where public mass transit in India actually outpaces the adoption of personal cars? If that 71% is a trend, not a blip, it changes the entire energy and urban planning landscape of the country.
It absolutely does. If the bus becomes cleaner, faster, and more reliable than a car, the Indian city of 2030 looks very, very different.
Something to think about the next time you're stuck in traffic next to a silent electric bus. Thanks for listening to The Deep Dive. We'll catch you on the next one.
Stay curious.